HCW Biologics, ticker symbol HCWB, just made headlines again, this time with a jaw-dropping 60% rally on Monday, August 25th. That's right, the stock surged from the mid-threes to touch highs above $7 in a single session, closing the day with a gain that caught almost everyone's attention. For a company with such a small market cap, this kind of move isn't just eye-catching, it demands a closer look. So, what's driving it? The company unveiled its latest advancement in cancer immunotherapy, a pembrolizumab-based fusion therapeutic built on its TRBC platform. For those not familiar, pembrolizumab is better known as Keytruda, one of the leading checkpoint inhibitor drugs in oncology. HCW's innovation involves fusing it with a TGF-beta neutralizing component, aiming to overcome one of the toughest obstacles in cancer treatment, the immunosuppressive tumor microenvironment. In early preclinical studies, their construct outperformed Keytruda alone, showing stronger T-cell activation and greater tumor suppression in models of pancreatic and ovarian cancers. That's the kind of scientific promise that gets investors excited. But let's be clear, this is still preclinical. No FDA-cleared human trials yet, no revenue stream tied to this therapy. Which brings us to the reality check. HCWB is a tiny biotech with a market capitalization hovering around just $10 million. That means wild swings are not the exception, they're the norm. When you combine a very small float with a big headline, you get these outsized moves. It's why some traders are looking at HCWB as a potential short-term opportunity, but also why long-term investors need to weigh the risks carefully. Now, let's talk numbers. The company's most recent quarterly report showed revenues collapsing from $600,000 a year ago to just $6,000 this past quarter. Losses narrowed slightly thanks to cost-cutting and a $5 million capital raise, but they're still operating at a significant net loss. Cash burn remains a challenge, and dilution risk is ever present for a microcap biotech. On the other hand, that recent capital raise did extend their runway, giving them some breathing room to advance programs toward clinical stages. So how should we think about HCWB as a stock to watch this week? First, from a trader's perspective. The massive spike in volume, nearly 87 million shares traded compared to an average closer to 130,000, tells you this name is on the radar of momentum traders, retail speculators, and maybe even some institutions looking for quick biotech exposure. If that volume stays elevated, volatility could continue. We might see another sharp move higher if momentum carries forward, or equally sharp profit-taking as traders lock in gains. Either way, the action is likely to continue, making it a prime candidate for short-term trading setups. From a longer-term perspective, HCWB is in the same bucket as many early-stage biotech companies, high risk, but potentially high reward. The promise of a novel checkpoint inhibitor fusion is intriguing, particularly if it moves into phase 1 trials and shows safety and tolerability in humans. Any positive clinical data could be a major catalyst for the stock. And with such a small market cap, even modest licensing deals or partnerships could dramatically move the share price. That said, the road from preclinical data to FDA approval is long, expensive, and full of uncertainty. Many candidates don't make it past early-stage trials, and HCW Biologics would almost certainly need to raise more capital along the way. What makes this week interesting, though, is the immediate backdrop. You have a fresh catalyst in the news with their TRBC immunotherapy announcement. You have a stock that just proved it can move 60% in a single day. You have a microcap float that magnifies every headline. And you have a biotech sector that's been seeing renewed speculative interest this quarter. That mix makes HCWB worth watching, not necessarily because it's destined for long-term success, but because the short-term setup is compelling and the long-term story has enough substance to keep people engaged. Investors and traders should be mindful of the risks. Liquidity can dry up just as quickly as it surged. Dilution remains a near-term possibility, especially if management sees an opportunity to raise funds after a big run-up in share price. And fundamentally, the company has yet to generate significant revenue, meaning the valuation is built almost entirely on hope and pipeline potential. For those reasons, it's a stock better suited for speculation than conservative portfolios. Still, there are a few things worth watching beyond this week. The company is under a Nasdaq compliance monitor through 2026, meaning it has to keep its stock price and filings in order to avoid delisting. Any slip-up there could weigh heavily on the stock. On the flip side, progress toward an investigational new drug application with the FDA would be a major milestone, potentially pushing the company into human trials and opening the door to institutional partnerships. Also, Insider activity has been notable this year, with executives purchasing shares in the open market, a move that suggests management believes in the long-term vision. So where does that leave us? In the short term, HCWB is clearly a momentum play. Traders looking for volatility have it right here. In the longer term, the stock is a high-risk biotech bet on the promise of its immunotherapy pipeline. Success could mean exponential upside, but failure or dilution could drive the stock back toward penny stock territory. That duality is exactly why it's one of the stocks to watch this week. To sum it up, HCWB surged 60% on Monday after unveiling its next-generation immunotherapy platform. The science behind it is promising, though still in early stages. The financials remain fragile, but the tiny market cap means even modest progress could have an outsized effect on valuation. For short-term traders, the volatility is the draw. For long-term investors, the potential is the bet. Either way, HCWB is one to keep on your radar right now.